please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. Well, it's quite disappointing actually, the markets for now. The Sensex is down more than 100 points. The Nifty has made an attempt to recover if you look at it, but
a minor pullback, isn't it? We fell about over 1% in both the Nifty Bank and the mid cap, and there has been half the ground has been covered, as you can see in the Sensex. Look at the mid caps. I think the recovery, or at least some short covering, if not buying, has definitely pulled up the mid cap index and even the Nifty Bank.
Big buying in Bajaj Finance, by the way, from the lowest point. That one is actually about to turn into the green. You just see that the chart. So there's bit of a look at that chart on Bajaj
Yeah, my
Finance.
pleading argument is that a lot of the terrain has not changed for these companies. Banks are not competing with them, except for you know, an HDFC Bank or a Kotak Bank. So the terrain is still open, the ground arena is still open for them in terms of being able to compete. And actually, many of the NBFCs can't compete so much now, and therefore their position should be fundamentally strong. Though at what valuations you will want to buy them is still something the market has to tell us.
actually on the Nifty, the low that we made was 10,882 and now we're back at 10,927. So it's about a 50-point jump that you're seeing from the low point. But really it pales in comparison to the fall that these stocks and the market has seen over the last many days. But since we're talking about NBFC stocks, they're losing some more ground this morning. Let's take stock of the situation. Ramesh Iyer, the Vice Chairman and MD of M&M Financial Services, is with us. Mr. Iyer, good morning. What is the current cost of funds? If you can tell us, you know, is it expected to increase? Double-digit cost of funds at the moment?
So clearly cost of funds have gone up and I've said this before as well. You know, it's not as steep that one needs to worry about are you able to pass it on to consumer or not. That's one. And two, the average cost of fund for us still remains at about 8.3, 8.4. Since we had, you know, always a well-matched fund that we've taken, and therefore any new borrowing comes with a new rate, of course, and that comes at about 8.7, 8.8, but the average is still at about 8.3, 8.4.
Well, Mr. Iyer, so if you can tell us how much the cost of funds have gone up for you in the last 1 month.
So I think it's, again, important to understand it starts from the availability of funds before we even kind of really worry and speak about rate by itself. And then followed by what's the demand for that kind of money. You know, if somebody's chasing growth, then you need to worry that, you know, why do you need to chase growth at that cost? But if the demand on the asset side is little natural, people are wanting to buy assets, and are they willing to pay this kind of price? And if they aren't, I think as a finance company, we are at least very clear that we must have the margin orientation very high and do only as much business that we believe can be done through the cost risk that can be passed on to the consumer. I mean, as a finance company, I don't think we're here to absorb all of that.
Okay, Mr. Iyer, good morning. What may be a reasonable rate of growth you can forecast for FY19 and if possible for FY20?
You know, I somehow think if the demand is still continuing to remain the way it is, at least from rural India, and if rates are going to be some way a spoiler if we think, then in the past we have seen how the OEM, the dealers and the finance company, all three come together and maybe share some burden, passing on something to the consumer. So let's, for example, assume if the rates go up by 50, 60 basis points or even more, and we believe the whole of that cannot be passed on to the consumer. I think the four of us, between the consumer, financier, OEM and dealer, one would share a 10, 12, 15 basis point each, and the demand would still be protected.
Okay, well, you know, yesterday the auto stocks fell quite a bit. I mean, higher petrol, higher EMI, now insurance costs have gone up. So all of that is putting pressure, we presume. Will demand for loans also fall when rates rise?
I would think so, because even as a financier, what we need to forecast out of all of this is what's going to be the EMI size that's come out, and therefore is the consumer ultimately going to earn to be able to repay, especially on the commercial side. How much is he able to pass it on in the form of a freight rate or in the form of a passenger fare? You know, if it's a personal used vehicle, one can always delay or defer the purchase. But if it's a commercial use vehicle, one would, even the operator would want to look at, can he pass it on to consumer? I think that seems to be the pressure point or the discussion that one is having, to say with all this input cost going up, what's the ultimate consumer price going to go up and what's the scope for that increase?
So what have you gleaned from your customer behavior? Is the demand for personal vehicles dampening, or is the demand for freight vehicles dampening, or are they likely to get dampened?
So, you know, September, fortunately, we are almost at the start of the Pitru Paksh. Normally the demand falls around this time and it kind of restarts in the festive time. The just gone by festival, we did see some demand pickup happen, at least in the states like Maharashtra, MP, etc. Because this is where we saw the celebration level high. But the real test will be the Navratra time. Once it opens up after Pitru Paksh, what's the demand going to be? I think the good time to discuss this, if all this cost remains the same, the good time to discuss this will be the Navratra. How's the festival panning out? Okay. So I think we should wait for that season to open up. My own assumption is it will open up well.
Okay, it will open up well. By the way, quite a bit of recovery in the market. Sensex almost went into the green. Let's see how if this can sustain now. But Mr. Iyer, would you see margins getting seriously squeezed?
I would very clearly think so, that if you're working in a segment which is highly competitive, where you're not able to pass on your cost to the consumer, there will be pressure on margin. Which is why, you know, both on the asset and liability side, having a very good product mix is extremely important.
Okay. So, what about gross NPAs? Are you expecting any kind of recovery as far as gross NPAs are concerned? I mean, the quarter is almost over, half of the year is almost over, so you will have an idea.
I think clearly that's a trend we are seeing this year, unlike any years before. Normally, the first and second quarter shows up increasing, you know, NPAs, and then they correct in the last two quarters. But this year has been a very different story, and I've said this before. At the end of first quarter, we saw collection efficiency improve, we saw gross NPA come down, and we do see the rural market continues to remain very positive.
Okay, well, just one last set of numbers I want from you. Given the current state of the debt market, how much are your assets under maturity under 1 year, and how much of your liabilities mature within the year?
So absolute value is not ready with me, but the way I looked at it, we have a 22% plus as far as our total inflow is concerned, is higher by 22% compared to outflow for the 1 year bucket period.
All right, Mr. Iyer, thanks a lot for your time today. That the market was hearing you, and the stock has recovered quite a bit. In fact, it's the top F&O gainer now. 4.5% higher is what you have on M&M Financial. The market also has recovered quite a bit. Ashwini Gujral, Mitesh Thakkar and Rajat Bose now join us. Ashwini, this is a sharp pullback that we're seeing from the low point of the day. Your thoughts, low point of the morning, and what would be the trades now?
Get short immediately. On the bank Nifty, you had a 200 point pullback on the bank Nifty. You know, crude is at 81.50. I mean, what are we talking about? This will get sold into and brutally will go back to the lows of the day. You know, again, kind of pause. You know, when the pullback is sustainable would be when there is some action. Just these random pullbacks, you know, this is an invitation for bears to get short again. So today this was expected, 2 days of big downside, third day also market goes down, makes a low, and some kind of a pullback. I don't think this is going to be sustainable even for half an hour. Having said that, individual stocks, you have a rally now, so sell Kotak with a stop of 1145, target of 1100. ICICI Bank, that's a sell with a stop of 308, target of 292. And Oro Pharma, you can buy with a stop of 730, target of 770.
Okay, I can take your point. I think some of this covering could be engendered by the fact that the rupee has been pulled back to 72.81. You know, it was threatening to go well past 72.90 towards 73, and looks like there has been a concerted pressure to pull it back, and that must have given some ammunition to do some short covering in the stock market as well. But you know, crude actually has gotten a little worse. It went to 81.47. It was in the morning 81.4 for us, 0.40. So the broader macros are not changing at all for us. Mitesh Thakkar, good morning again to you. What are you trading, long or short?
No, I think, barring pharma and IT, I think the broader market still remains weak. And while we did have a good recovery from 50-60 points lower on the Nifty, I think these recoveries will happen because we are oversold. But I don't think there's a chance of a reversal is yet. So maybe shorting on these recoveries could still be a good idea if you are trading the rest of the pack, barring the currency sensitive one. And I have two sell calls. Engineers India is a sell with a stop at 121 for targets of 112. And Berger Paints is a sell with a stop at 294 for targets of 273.
Okay, let's pull out Dewan Housing once again. DHFL, it's now approaching 20% fall. So, this, of course, what you had last week was a bit of a sell-off on volume. And now, one day rally, and that's seeing quite a bit of sell-off. Ashwani, any thoughts here?
Somebody is cleaning out their portfolio. So, thinking that these guys have become great value, etc., I don't think is going to quite play out. So, my sense is, financials is in that space where all kinds of overvaluation, over ownership will get corrected. And markets are a forward-looking mechanism. They are trying to price in what happens 6 months from now. So, whether today everything is fine or not, that hardly makes a difference to market prices. So my sense is NBFCs will get cleaned out from people's portfolios. This is not your ordinary correction where, Bank Nifty falls 1,500 points in 2 days. I think it will get worse before it gets better.
Okay, well, the latest casualties now are the real estate stocks, so don't lose sight of them. DLF, in fact, in the last half an hour has fallen about 1% or so. Names like Prestige Estates, etc., are all in the red, so just keep an eye out on that whole pocket. Volumes are also picking up in the real estate space on the downside. Well, Rajat Bose is also with us. Rajat, hi, morning. The Nifty has recovered about 62 points from the low, so it's getting very volatile really in the market. Would you use this as an opportunity to initiate a fresh short position, and what would the individual stock ideas be?
No, I would rather go with the recovery that is happening, and I've chosen two stocks. One is posting an all-time high, and another has actually covered yesterday's high and now sustaining above that. The first one is HCL Tech. I'll buy the September futures. When I gave this call to your desk, it was 11:11. Now it is 11:21. So I raised the stop loss to about 11:05, and target would be 11:32 and 11:39. And regarding Titan, I would say put your stop loss below 790, and 813 and 821 are the two targets for Titan. Titan in the intraday charts, especially yesterday's and today's put together, it shows an inverse head and shoulder formation, and probably a good short covering rally is likely to happen there. And at the same time, regarding the Nifty, I would say that probably we would post a good short covering rally towards the end, and today we would start the recovery. That's what I tend to think, and that's why these two buy calls.
Okay, anyway, IT has been a bit of a shelter from all the fall. Rajat Bose, Mitesh and Ashwini, thank you very much for joining us. We are of course going to come back to you for advice often. At the moment, the market has found some bit of support at 10,880 or thereabouts, and recovered a little bit from there, about 50 points. Let's see whether that holds. But the mid-cap is against getting sold into, even as it recovered. And the Nifty Bank as well is not able to make too much headway. So the current upswing has gotten sold into, not entirely drastically, but has got sold in. Let's get to the place where the problem began, at least the latest round, the crude prices. Manisha Gupta has joined in back again with the first trades in the commodity space. Good morning again, Manisha.
Thank you so much for that, Lata. Well, at best, trading steady for the crude oil prices there. Remember, we did see 3% gains in the overnight market. There was a bit of a, excuse me, pullback, and we have seen buying excuse me, buying come back in the Asian markets, and that's exactly what we are seeing for the Indian space here as well. The fundamentals, as we have been telling you, are Iran sanctions, the US inventories at 2015 lows, OPEC's unwillingness and inability to increase supplies. All of that has been adding to the premium, and of course the demand estimates are quite on the stronger side. So that's taken the crude oil prices to 4-year highs, is where it's trading quite comfortably in the international markets, and the Indian prices as well continue to trade from there. The US dollar index has inched up a bit, and that seems to be weighing onto the metal space. So the gold and silver prices, which actually clocked in 7 straight sessions of gains, have gone in for profit taking today. So on your screens, around 0.25% of a decline is what we are seeing there. Also, it is the beginning of the US Fed meeting today. You might see an interest rate hike tomorrow. So ahead of that, there is that profit taking as well that you have seen come in here. The base metal prices have definitely gone in for a very serious profit taking. If you look at LME, we have seen the copper prices decline by 2%, zinc is down by 3% as well, and that's exactly what you are seeing in the Indian space as well. With the US-China trade war escalating, with the talks off the table, and the global growth demand at a question mark right now, especially with China, where we are looking at major demand, serious demand decline coming in, this sector also has gone in for profit taking. The only thing that has been trading positive really has been nickel, because the steel prices are trading nearly 0.25% higher in Shanghai, and that is where perhaps nickel is taking cues from. But everything else in the meanwhile has gone in for profit taking. Remember, Friday was a very strong day. Yesterday we saw very steady trades, and today it's seen a decline in that space. Trading strategies, and we have then from Grow Value, which have a buy call in the energy sector. For crude oil prices, they're looking at upsides of 5,380. It's a buy on natural gas as well, and they're watching out for targets of 227.
Okay.